of presenters today. Speaking first will be Juan Perez, Senior FX Trader and Strategist. He'll be talking about the Mexican economy and the Mexican peso, followed by Dr. John Min, our Chief Economist. He'll be talking about things to look at when hedging and monitoring, hedging and mitigating risk around currency exposure. And then John Min will be followed by Amanda Bullier, a consultant with Euromonitor International, who's done detailed analysis around the Mexican distribution channels. So I think we have a great team for you today, and you should get a lot out of their collective insights. Today in the webinar, we'll talk a little bit about NAFTA and its relation on trade impact. We'll look at currency fluctuations and how they can impact your business, how you can manage those exposures through hedging techniques. And then we'll have a deep dive into the Mexican retail distribution channel, both retail as well as e-channels. So with that said, I'll pass the presentation to Juan Perez to talk about NAFTA and Mexico.
Thank you so much, Andrew. Welcome to the webinar, and of course, thank you for paying attention to what we have to say about Mexico, and obviously the Mexican peso, trade agreements, and everything that we're going to be touching base on here in the next few slides. And I apologize for being a little bit under the weather this morning, but thank you for bearing with me. As you read this first slide, of course, the very first thing that comes up is, what is NAFTA? NAFTA is a North American Free Trade Agreement, and it became infamously popular as a major economic phenomenon of the 1990s. As globalization and free trade really started to take hold of markets, countries, and specifically countries that were within the same continent, started working together. And the North American Free Trade Agreement truly is quite an achievement, not only diplomatically, but commercially, because even though it is not quite a treaty and quite an agreement as the European Union, it was used as an example in order to create these transcontinental, transnational trade movements that started taking hold all across Asia, Africa, Europe, and including South America, as of course the farther southern neighbors, as they looked at Latin American countries such as Mexico, started also looking into their own economic situation and what type of possibilities they could have in free trade. So NAFTA really is the very beginning of the United States, Mexico really becoming a very, very interdependent unit along with the Canadian neighbors up north. So moving on to the second slide, which of course continues to talk about trade and some of the specifics there that we'll go over. Gross domestic product, known of course as GDP, truly improved for all three members of NAFTA. Particularly for Mexico, it was a tremendous opportunity because after colonial times, and not to go too far into history to create a history lesson for you guys, but colonial times and independence created quite a period of a lot of regional instability. But once Mexico was formed entirely as a nation and as a country, it really needed to see some sort of fast growth in order to create a government that was stable enough for a population that ended up becoming over 100 million people. Now, of course, it's a population of over 200. But Mexico's GDP, as a result of free trade, improved dramatically to the point where Mexico's prosperity linked to GDP per person growing by 18.6% the past 20 years. So overall, you can say that NAFTA has improved the Mexican economy to an extent where Mexico is considered in Latin America as the most important market. And once you reach that market and you make it there, the rest of Latin America opens up. Eliminating trade barriers is the most important thing out of every free trade agreement and any free trade pact. And we do have to consider the fact that geographically, the two countries are very important. They have tremendous cultural and historical things that they do share. So NAFTA only made these bonds stronger. NAFTA, of course, right now is being negotiated, and there's a lot of pressure for Mexico because Mexico is the most immediate country to the United States, and 81% of its exports go to the U.S., while 46% of its imports hail from the United States. So naturally, commercial ties cannot be severed. Although issues do come up every now and then, it is impossible for us to believe that at any point the United States and Mexico would not be trading, and especially would not expanding as time goes on. And for the Organization of Economic Development and Cooperation, well, the news on Mexico is really good. It's a very, very strong Latin American nation, but also Mexico is highly respected around the world. So it is truly a blessing that in this hemisphere, we happen to have such strong economic powers, and because of natural resources and a tremendous wealth in labor because of the amount of people that we have in this continent, NAFTA happens to be a very, very great example of how continental cooperation is even more important than transnational, transcontinental cooperation. Stronger families in Mexico. So one of the things that I put on there, that 80% of the people believe that they know someone that they could rely on, it's excellent for the Mexican market because it shows that it is a very, very reliable market to do business in. If we move on to the third slide, this is when we get into the specifics of the Mexican peso. Now, I hope all of you can see this nice Bloomberg graph. It does not expand historically farther out before 2013, but what you can see is a very important trend of Mexican depreciation. And Mexican depreciation truly, truly began naturally as a result of the financial crisis, and obviously the very attempts at trying to overcome the economic calamity that it represented sank the peso for a long time. And you see that that trend from the very beginning of 2013 to the very end of 2016, where the peso ultimately reached its worst level against the US dollar multiple times. In 2016, the peso lost its value to record lows against the dollar 4 different times. Now, the expectations changed with a rosier picture of the economy, and naturally, the Mexican peso improved from the beginning of 2017. This, of course, is a great sign because there were a lot of concerns over what the Trump administration, speaking of course, about what they would do to free trade. There were a lot of threats initially to what could happen to NAFTA, but these things have started to fade because naturally, once the Trump administration came in, all three parties from Canada, Mexico, and the United States made it an important and imperative issue that they wanted to start speaking about. And as the market realized that this was happening, the Mexican peso started strengthening from the beginning of 2017. So just to read along with the slide, Mexican peso devaluation at the time was primarily the result of concerns over how the U.S. potentially abandoning NAFTA would cause major havoc to the Mexican economy. Well, the reality is it seems that the United States is no longer really thinking about abandoning. Really, they just want to improve a trade agreement that has existed for over 24 years. Moving on to the fourth slide. I want you to see that graph and what it represents its gross domestic product. The great thing to, on a date like today, in April of 2018, to see the recovery and the steadiness of the Mexican economy is quite impressive. I know that Latin American countries in particularly were hurt by the very idea that the very big, gigantic U.S. economy, along with the European economies, were struggling. Mexico, of course, being the geographic neighbor and so reliable on the economic prosperity of North America, and especially the United States, felt the hit more than anybody, and immediately. But the recovery was a quick one, and that actually is quite a statement to the strength of NAFTA and to the strength of the continent of North America as a whole. And if you notice, even though there may have been a few dips, especially in 2012 and 2013, for the past 4 or 5 years, we have seen the Mexican economy its outlook has actually been better than was expected by the Central Bank of Mexico, government officials, and international experts. And moving on to the final slide here, which is really what we hear, well, and at least on my side of the trading desk, what we really focus on is trying to understand the risk to the Mexican peso in the next 3 to 6 months. Now, the most important thing to remember is that on July 1st, Mexico will be holding presidential elections. There are quite a number of candidates, actually 3 main ones, but Andrés Manuel López Obrador is the most important one to discuss because he happens to have a political stance that is based on anti-Americanism. And I'll explain that as primarily trying to rethink and reconsider the Mexican ties to a lot of American business agreements and to a lot of the flow of not only commerce, but of people and mobility and border control. His policies seem to be a little bit more of a shock to our system, and that's why it would be punishing for the peso if he became president, because naturally it would create conflicts that are at this moment, for the very sake of business flow, unnecessary. And any threat to the political establishment in Mexico, which has been very pro-business and very pro-free trade, is an immediate attack on the peso as a currency of strength. So, of course, the instability that he could bring along especially for the very beginning of his first year, if he were to have an administration, could be catastrophic to the peso. So he has to be our main person. As you read this slide, I will tell you just a quick anecdote of my experience recently at a Bloomberg event in Mexico. I was lucky to attend in the middle of March an event where Bloomberg held the 3 economic advisors to the 3 main political candidates of the presidency, and it was quite a show, to be frank. There were a lot of traders, a lot of investment and hedging people in Mexico that were present at the event. And what they noticed was that the 3 economic advisors were bickering at each other at who was going to be better at building infrastructure, primarily a brand new Mexico City airport. Now, Mexico City, when I got there, it's a monstrosity. It's a gigantic city. It's very overwhelming, and they absolutely could use newer infrastructure. But one thing that I absolutely took from the discussion, of course, these guys wanted to promote their candidate and their economic policies, and they did it in a very aggressive way. But one thing that I truly got out of it was the hunger in which they talk about infrastructure. And one thing that I witnessed in Monterrey, Mexico, is a city that within the past 5-10 years has grown exponentially, where I was staying at a hotel that was 2 years old, and there were about 5 towers being built around it. What I'm trying to really get at here, and it seems very energetic and it seems very positive, but I truly want to manifest how Mexico is hungry for growth. And there may be different political venues that are options currently at the moment on how it could go. Even though there's been some friction over negotiations, the last 7th round of talks for NAFTA revamp have given us some good news. Canadian officials, Mexican officials, and U.S. officials agree that the automotive industry could have easier regulation between the 3 countries, that a specific requirement for automotive parts to be a certain percentage American, a certain percentage Mexican, a certain percentage Canadian has been taken out. And it seems like the 3 countries are going to be working together, and that even though a new administration may be coming along, the risk will be minimized and it will fade.
Great. Thank you very much, Juan, for the overview of the economy and the peso. We're going to transition now to John Min, who will be talking more about specifically managing currency risk specific to Mexico.
Thank you, Andrew. So I'm going to take a little bit of different spin or approach to it. We're going to be looking at the banking and the business side of doing business in Mexico. And what's surprising is there are about 7,500 banks in the United States. And I think you will be very surprised to learn that about 30 of them actually do their own foreign exchange operations or provide services to their customers. So if you're working with a community bank or even a smaller regional bank, there's a good chance that that bank that you've been working with for years for your credit line, facilities, banking services may not do their own foreign exchange. As a result, they outsource that to one of the big money center banks, especially out in New York and Chicago and LA. And as a result, there's two entities are involved doing your transactions, whether you're buying Mexican peso, selling Mexican peso, if you're collecting Mexican peso in Mexico, trying to bring the money back home, you're actually going through a big bank and another bank. So as a result, there's going to be high transaction costs. In fact, the McKinsey Consulting Group did a study a few years ago, and what they found is the money center banks cost of doing a transaction, the average total cost, just covering the full cost of doing a one SWIFT international wire, is roughly about $300 from start to finish. So if you're doing a smaller size transaction, I think you will notice that in terms of higher markup and the transaction cost when it comes to the banks. Now, on the flip side is that if you're listening to this webinar and says, you know what, I'm dealing with the big banks, I'm dealing with one of the biggest money center banks in the world, well, that's fine, but you got to realize that those are banks that are really geared towards servicing Fortune 100 type of big enterprise companies. So my guess is that most of you, if you're working with the big banks, you're doing all your banking through online. Technically, in the industry, we call that as a retail transaction. You are not getting the most competitive and fair rates of exchange in the market because you're just getting it off the online. Some of these big banks, they just put up the daily rates and they just feed it through the system. So if you want to work with a specialist, if we were doing this presentation in London, which is the largest financial market in the world, working with a specialist is no big news. There are about hundreds of companies, fintechs, providing all aspects of banking services, including the foreign exchange component. But in the United States, we do have a very high barrier to entry for fintechs, especially with the Treasury and 50 independent state banking commissions. They all regulate it in a different way. As a result, there are about a handful of specialists that provide the foreign exchange services. And the reason why you may want to consider working with specialists is because in the foreign exchange market, a lot of people don't know all the transactions that take place on a daily basis, which is roughly about $5.2 trillion a day worth of foreign exchange. All those transactions are OTC transactions. I'm sorry for being too technical. OTC stands for over the counter. What that means is that anytime you're doing any type of transaction that involves conversion of one currency to another, let's say Mexican peso to US dollars, all that pricing is negotiated. So as a result, if you call 3 different banks, you're going to get 3 different rates for the same transaction. And if you call one bank and talk to 3 different traders, more than likely you're going to get 3 different exchange rates. So as a consequence, it's really important. It's the best practice in the industry to have a second opinion, someone else to give you another rate as a reference point. And that's why I think the specialist makes sense. You still have a primary relationship with your bank, excuse me, for the line of credit. But I think you do need a specialist just to get the reference pricing on the exchange rates. And finally, sorry about the, if you have any information request or if you want to know which way the market is headed, what you're going to find out is that most of the market insight or market news publication coming out of banks, they're tailored toward mostly traders and for those companies who are doing huge volumes of exchange. As a result, if you're looking for specific information about Mexican peso because you may have exposure 30 days out, 60 days out, it's going to be really hard for you to find accurate, reliable source on the web on your own. And if you call your bank, I'm pretty sure that no one can provide that tailored type of information that you need to help you run your business. And again, that's where the specialist jumps in because they can customize their market insight and analysis just for your business needs. Now, going to the next slide. In terms of doing the transactions, this there are 4 different ways to do it. Most of you might be aware of the spot transactions. These are something you buy now and you sell later. You buy now and you sell within 2 days. So these are for more immediate transactions. If you receive the bill and bill says pay us upon receipt of the shipment and your shipment just arrived, then you will do the spot transaction. You buy in the market and you send that out the same day. Now, there are forward transactions. These are something you buy now, but you pay later. And these are ideal if you're doing transactions with payment terms of 30 days, 60 days, 90 days. So if you're doing business, if you're buying something from Mexico and you receive an invoice that says payment term of 90 days, then if you would like to just eliminate the foreign exchange risk that Juan was talking about, then you can call into your specialist or your bank, and you can lock in the rate for 90 days out. At that moment, you have no financial transaction obligation to settle until the 90th day. So you can lock in the rate today, and you can settle 90 days up to 12 months. In certain situations, we have clients who have done up to 2 years. So if you're doing a big construction work, if you're building a plant, and you want to just lock in the Mexican peso rate for the next 18 months, it can be done. But again, it's an OTC transaction. So all the forward pricing is going to be negotiated. So I highly recommend getting a second opinion from a specialist. And then there is a market order. This is a little bit more sophisticated way of doing transactions. During the course of the day, especially major currencies like US dollar and Mexican peso, we do see tremendous amount of volatility, up to about 100 basis points, 1%. And during the course of the week, we may see the volatility 2-3%. And whenever there is a week with the important economic indicators coming out on both sides of the border, we can see a significant movement. So what market order does is that if you have financial transaction in terms of either buying or selling Mexican peso for the dollar, you can place an order that says pretty much, I like to buy Mexican peso at this rate if we can get to it within a certain specified period. A lot of our clients who are a little bit more sophisticated with foreign exchange, they simply do it overnight, which means that the foreign exchange market is open 24/7. As a result, we got traders around the world monitoring the market. So whenever there is a favorable time at the rate that you would like to purchase, we'll automatically buy Mexican peso per your instruction, and then we will notify you the next day. This is a nice way to save about 100 to 200 basis points on your transaction, even a short time period, a window of about a week. The last one is the holding account. I think this is like the, how could I say, most important industry secret that needs to get out of this webinar, because a lot of folks who are doing business in Mexico, they take the time and effort to go down to Mexico to open up a bank account so that you can collect funds in Mexican peso and do business in Mexican peso. Only problem is opening up an account in Mexico is costly, and maintenance, there's a tremendous amount of maintenance fee, and then sometimes you have to go to Mexico in person to open up a bank account. And obviously, reconciliation, everything is just very time consuming. Nowadays, working with a specialist and some of the banks, we provide what's known as a virtual multi-currency account. It's a segregated account under your name where you, just by registering with a specialist or even with your bank, you should have access to bank accounts around the world where you can receive, in this case, funds in Mexican peso and send it out as a Mexican peso. Only difference between actual bank account and the holding account is you do not earn interest in holding account. It's not really a deposit account. That being the case, given the current rate of short-term interest rate, I don't think there's that much loss in terms of dollars and cents by establishing a holding account. And in terms of hedging, what should you hedge? Just to give you an idea, we work with hundreds and hundreds of businesses in the United States who have affiliation or operation or business partner or business transaction in Mexico. And on average, their gross profit margin is about 10 to 20% based on different industries. And if you look at the Mexican peso and US dollar movement for the past 12 months or past 18 months, is we are seeing movements of 10 to 14%. In fact, Juan just talked about the fact that Mexican peso has been one of the most volatile currency, especially around the presidential election time in the U.S. And also we expect the volatility to increase as we get close to July when the Mexican presidential election is going to be held. As a consequence, if the currency moves about 10% in a matter of 6 months, and your gross profit margin is about 20%, in a way, half of your expected profit is at risk if the currency moves against you. As a result, if your focus is not to speculate in the foreign exchange market, but to run your business, then we highly recommend using hedging tools to lock in, to eliminate your foreign exchange risk. Now, I'm the first one to say we go to a lot of Treasury Management Association meetings and things like that. And as soon as we talk about hedging, people say, no, we don't understand it, it's too risky. In fact, hedging is the most responsible thing you can do if you're running a business because you are eliminating foreign exchange risk. And you can use simple hedges like forward to lock in the rate, and we talked about that in the previous slide, where you can simply get the rates of Mexican peso in the future, and you just lock it in today, so you don't have to worry about the volatility in the market. Next. And lastly, in terms of best practices, we are on the phone with our clients every day, and we actually visit a lot of our clients who are doing business in Mexico. And based on our interactions, we noticed that the best practice in industry, especially now, because the direction of the currency can move significantly in a matter of 6 months, 12 months. So it's almost impossible to forecast where Mexican peso is going to be at the end of this year. But we have a pretty good idea where the Mexican peso will go around 90-day cycle. So a lot of our sophisticated clients, what they're doing is they're doing forecasting and budgeting about a 90-day cycle on a quarterly basis. So every quarter they sit down, they're trying to figure out, it's almost like a weather forecast on the foreign exchange. Which way do you think the dollar will move against the Mexican peso? How much their business is at risk if the currency moves against them? And then they try to eliminate about 70 to 80% of their exposure by using simple forwards. And again, all that means is you're locking down the price of Mexican peso for the next 90 days. So if you need about $1 million worth of Mexican peso in the next 90 days, our recommendation is to lock in about $800,000 worth, 80% of it. And main reason we say that is because at the end of the quarter, you may not need all that exactly $1 million worth of peso, but also at the end of the quarter, if based on which way the market has moved, you can use the spot market to fill the gap. So they're using the 90-day cycle to use forwards to manage their foreign exchange during the course of the year. And some of our clients, what they do is they budget the Mexican peso for the entire year, and they just buy a lump sum. And during the course of the year, they just simply draw down from it. And as they run down the Mexican peso balance, then they go into the market using market order, as we talked about, being very opportunistic. And then they buy bulk of Mexican peso and they draw down from it. And then lastly, this has nothing to do with the FX risk, but very, very helpful for running a business. Nowadays, there are lots of sophisticated payment platforms. They can integrate with any type of accounting systems that you may be using. So all those painful things you have to do at the end of the month, at the end of the quarter, when you have to reconcile your accounting and you got to translate your earnings in Mexico to U.S. dollars or U.S. dollars to Mexican peso, by just integrating the specialist platform to your accounting system, everything can be done real time. And it can be done seamlessly and without any human error that's getting involved. So there's a lot of stuff there that can be done to help you manage your business, especially dealing with the Mexican peso. And summary, the last part. As Juan was talking about, NAFTA is very, very important. Obviously, it's going to affect not just the business flow, but also the currency as well. In fact, if you really want to get a detailed information on NAFTA and the potential implications between the U.S. and Mexico, Tempus, we did a podcast in Atlanta last month, with the Mexican Council General of Georgia. He really went into details of what the implication might be. But I do have a little bit of secret that I want to share with you. The sentiment among the Council Generals, including the Canadian representatives, is that the NAFTA situation negotiation is going to be worked out, especially around June or July, because they like to have this in place before the Mexican presidential election. So if you want more details, please get in contact with us. We can send you a link to the podcast that we did just recently. And the next part is the Mexican peso, one of the most volatile currency we have seen, as Juan has shown using his Bloomberg screen. We are seeing about 10 to 15% movement per year on a direction. So again, if you're running a tight margin on your business, this is something that you really need to focus on. And of course, getting the market insight on a quarterly basis at least. I think that's the best practice at this moment. And then lastly, if you are doing any cross-border transactions, if you want to protect your profit or your expected margin, whatever it might be, you can use simple hedging tools like forwards to just completely eliminate the foreign exchange risk. And my recommendation is, if you are going to be working with the specialist for that getting a second recommendation opinion, please make sure that specialist is regulated properly, because in the United States, they need to be regulated by the federal and the state level regulators. And then lastly, this is something that I really want to underscore. In the old days, a lot of people simply say, foreign exchange is one of those things that we don't understand it. We can't really influence it, so we just ignore it. But now the market volatility has really picked up. So it's one of those things that you need to actively manage, which means you got to make a conscious decision every time when you're doing transaction with Mexico, which currency you're going to be dealing with. It's easier to deal in US dollars, but there's no free lunch in economics. What that means is that the convenience comes with the cost. So that's the reason why it is so important to look at every type of transactions using two different currencies, US dollars, in this case, Mexican peso.
Great, thank you, John. Before we transition to Euromonitor International, just want to see if we have any questions on the economy or the currency hedging.
We do have a few that have come in. This is for Juan. What effects do you envision will come immediately if Andres Manuel Lopez Obrador, which is the left side candidate of the
expecting the unexpected. So, for example, the Brexit situation and the Brexit referendum back in June of 2016, the British pound was trading around 1.5. It quickly went down to its lowest levels in over 30 years, to the 130s, and then eventually it dipped into the 120s. And primarily because I certainly did not see it coming, and many people did not. So the Brexit shock was one that taught us a lesson that indeed the foreign exchange market, sometimes it can be boring. I'm not going to lie here and tell you it's the most exciting market in the world, but it can be. But certainly at that moment, it was a lesson in the type of stability that can be created when free trade and an established status quo in business goes away. I think because of the reasons that I gave during the presentation, primarily that have to do with this type of anti-establishment sentiment, if that is truly manifested, and if the policies and the politics are there for an administration such as his to exercise, any type of anti-Americanism or anti-business agenda, the first thing that's going to be hurting is the Mexican peso. In our predictions, in our forecast for peso, we have been close to being very, very accurate, and primarily because we see these anxieties and concerns and worries manifesting themselves on the peso, which could go to 19 to 20 per dollar if Obrador comes into power.
Great. Thank you, Juan. Any other questions?
We are running short on time a bit, and we want to get to Euro monitors. But if you wanted to briefly answer this one, John, are there any costs associated with getting a forward contract?
Nope, there's no cost at all. Only cost that might be associated is that you may need to put down a collateral if you're working with a specialist. If you're working with your bank will take the collateral using your line of credit.
Great. Okay, thank you, John. So we're going to transition now to Amanda Bouillier from Euromonitor International, who will be talking about the Mexican retail environment. Amanda?
Hi, everyone, and thank you again for joining us for this webinar today. So let's say that now that you've got a very thorough understanding of how foreign currency might work as applied directly to the peso, and you're thinking a bit more directly about how you'll be selling your products in Mexico, we'll take a look into the Mexican retail environment. We'll talk about a few things in the next 10 minutes or so. We'll look at key Housewares channels. We'll look at 2 key trends in Mexican retail that you'll want to be sure to be aware of. And then we'll focus in on e-commerce specifically, since for a lot of companies, that's the easiest way to enter a new market. We'll look at some of the challenges and opportunities associated with e-commerce in Mexico, look at some of the leading sites, and then we'll conclude. As with the section on the peso and foreign currency exchange, please feel free to be submitting any questions as we go, and I'll take those questions at the end. And if we can advance, perfect. So we're going to look at a few numbers in this section of the presentation about the retail environment in Mexico. And before showing any numbers, it's only fair to give you a bit of context on Euromonitor and where those numbers are coming from. We are a global market research and business intelligence provider with 14 offices located globally in the spaces indicated on this map. In addition to our regional offices, I'm based in our Chicago office. We have teams of in-country analysts in each of the countries where we conduct consumer goods and service research. So in addition to our Chicago office, we have analysts on the ground in Mexico, in Brazil, in Peru, and throughout Latin America. As mentioned, I'm located in our Chicago office where I oversee our retailing research for the Americas region. And Mexico retail is a particularly core remit of mine. All day, every day, I'm writing about, thinking about, talking about retail in the Americas. So if you're interested in chatting more about this topic, please don't hesitate to reach out. You'll find my contact information at the very end of this section. Let's go ahead and advance. Great, so we'll start with just a top-line snapshot of what the retail environment looks like in Mexico. And right away, what's jumping out at us is how orange it is, or rather how concentrated in store-based retailing the Mexican landscape is when we're talking about consumer purchases. In the left-hand chart, we're looking at the share of retail sales by channel for 2017. And we can see that in 2017, more than 90% of all retail sales in Mexico took place in a brick-and-mortar store or in a physical location. That's pretty different compared to what we think about for the US environment, where it might be closer to 80% taking place in a physical location. Definitely a different story compared to what we see in places like China or South Korea as well. On the right-hand side, we can see what share of growth in 2017 was contributed by store-based retailing, direct selling, and internet retailing. And here we see the picture start to change a little bit. Overall, in 2017, internet retailing sales contributed about 4% of total sales in the Mexican retail landscape, but you can see that it provided a disproportionate amount of growth. Internet retailing is still growing from a relatively small base in Mexico, but it is growing very quickly. We're seeing a lot of the things traditionally talked about as barriers to buying online starting to be resolved or at least moderated in Mexico. And so this is increasingly seen as a really promising channel. Another characteristic to be keeping in mind when we're thinking about online sales in Mexico is that Mexican consumers are fairly accustomed to buying in cross-border transactions. Oftentimes, domestic transactions where they go to a Mexican website and make the purchase in local currency and the product is shipped domestically, oftentimes that's easier. But Euromonitor estimates that between 30 and 40% of online sales in Mexico are actually cross-border transactions, which means that we've got this core group of typically higher income consumers in Mexico that feel very comfortable ordering things from the US or from Europe via the internet and having them shipped locally. So when we think about a retail strategy for a product company, like a housewares company, you've got a few options. You can be selling to consumers via a cross-border transaction like the one I just described, where you work to attract Mexican online traffic to a US or a Canadian or so on website and allow consumers to check out via that platform and make an international shipping purchase. You could have direct online presence in Mexico with a .com.mx website, perhaps. There's the opportunity to have your products stocked on the shelves of Mexico brick and mortar retailers, or to open your own brick and mortar stores yourself in Mexico. And so I've laid those out more or less in terms of complexity. It's a little bit easier to be selling to consumers through your US website and shipping the purchase abroad compared to, for example, setting up your own brick and mortar stores. There's really a spectrum of opportunities, but depending on where you are in your development of your products in the Mexico market, a different approach might make more sense for you. The trends that we'll go on to discuss, however, will be relevant for everyone. There'll be things to keep in mind, whether you're just starting with selling cross-border from a US website, or whether you're all the way down the path of development and looking at opening your own brick and mortar stores. Let's go ahead and advance. Great. In Mexico, there are 5 retail channels that are especially key for purchases of housewares and home furnishings. I've laid them out here. So we've got home and garden specialists, department stores, variety stores, direct selling, and internet retailing. I've listed here also some of the key brands in Mexico for each of these different channels, just so that you can be starting to think about what retail partners might be a good match for your product categories, or if you are having direct presence already online in Mexico or with brick and mortar stores, be thinking about who some of the key competitors in these spaces are. I'd highlight a couple of differences between the distribution of housewares and home furnishings in the US and what it looks like in Mexico. In both the US and in Mexico, we see the home and garden specialists, or the retailers that are very specialized in selling these products, such as Home Depot or Bed Bath & Beyond, present in both markets, being very important. We see department stores, however, as being much more relevant in Mexico for this product category than in the US. And an important factor to note is that if you open any newspaper or go to any news website, you'll see stories about how department stores in the US are almost obsolete, that they're performing very poorly, that sales are declining. And it's not the case in Mexico. In Mexico, the department store chains are performing very healthily. We haven't seen the same rapid development of e-commerce in Mexico that has been hurting department stores in the US. And further, there's just a lot more square footage dedicated to department stores in the US than in Mexico. So if we think about department stores per capita in Mexico, it's a much healthier ratio than in the United States. So these remain very relevant channels. These companies are doing a good job adapting to e-commerce at the rate that the market is developing. And so department stores remain a very relevant channel for this type of product in Mexico. Looking at variety stores, this is another case it's a channel that's much more important in Mexico than in the United States. The 3 big ones to have in mind for homewares and home furnishings are Coppel, Electra, and FEMSA. These are retailers that have a slightly lower income positioning than the department stores. If you looked at Mexico, you know all about the discussion about the base of the pyramid and how the majority of consumers are consumers in social classes D and E, indicating slightly below average income. And these 3 retailers are really key for the homewares and home furnishings product categories for reaching consumers. We'll talk about this a bit further in the slides to come, but something that these retailers have done very well is they have very sophisticated and effective financing programs, even for low-income consumers. So if you are at a product tier where you would be competing against the variety stores, that's a feature to keep in mind. If you think you might someday be supplying variety stores, that's definitely a benefit that you might want to look at running special promotions around or making sure that your products have access to. And then for direct selling and internet retailing, you can also see some brands here. Direct selling is much more important in Mexico than in the United States in general. Much like in the case of department stores, we see direct selling in the US not performing as strongly as it has in the past, but in Mexico, this remains a very healthy channel as well. Let's go ahead and advance. So in the next 2 slides, we'll identify 2 key trends affecting the retail sector, or trends that are important to realize about the Mexican market, as it may be different than the US market or other markets globally. The first trend to be aware of is that payments and financing really matter for consumers in Mexico. In the United States, we don't really view method of payment as a decisive factor for thinking about where to shop, but in Mexico, this is a very important part of the decision. There's a few characteristics of payments in Mexico that are pretty well known. There's low levels of credit card ownership. There's low levels of people using debit cards at points of sale. For the most part, financial cards are used to withdraw cash from ATMs and then use cash for the vast majority of purchasing transactions. Euromonitor estimates that something like 80% of consumer payment transactions in 2017 were done with cash. Also, as touched on in the previous section of the webinar, there's significant exchange rate fluctuation. This creates a complicated dynamic for retailers thinking about when to pass on these fluctuations onto consumers in the form of higher prices. It also has the potential to have impact on companies that do cross-border shipping from the United States, since the product itself as well as the shipping becomes more expensive when the exchange rate is unfavorable. And then finally, there is a relatively difficult consumer credit environment in Mexico. To get credit from a bank in Mexico typically requires a lot more documentation, a lot more steps. This was also touched on in talking about opening a business bank account. It's a much more complicated and time-consuming process than it is in the United States. So a lot of consumers in Mexico, especially those ones at the base of the pyramid, might effectively not have access to traditional banking credit. And that's why a lot of the retailers that target this group of consumers, this income level, have been so successful with their financing programs in the form of store-issued credit cards, in the form of interest-free financing. These are very important characteristics, especially looking at consumers in levels C and D. And remember that consumers in level C are consumers that earn approximately average income for Mexico. So very different from the United States in this regard. If you're thinking about opening your own stores or having direct online presence in Mexico, thinking about how to be issuing this kind of credit could be something important to be thinking about. And if you're looking at picking a brick and mortar store partner, it would be important to understand what kind of financing and methods of payment they offer. Let's advance. Perfect. As in the United States, in Mexico, shopping holidays are very important for the housewares and home furnishings categories. Some of these holidays, like Mother's Day and Christmas, are the same in Mexico as they are here, but I've also included a few other shopping holidays that are unique to Mexico that you might not be aware of, but want to be sure that you're participating in, whether you have direct retail presence in brick and mortar stores or online, or sticking with cross-border sales for now. Two big ones, especially if you're investing in e-commerce for Mexico, are the Hot Sale and El Buen Fin, and then, of course, Cyber Monday, just like in the United States. The Hot Sale and El Buen Fin are two e-commerce related holidays that were created by the e-commerce sector in Mexico a few years ago to drive attention and awareness of shopping online, and they've stuck around as important holidays. So it's very common for all of the big retail players, now both online and offline, to be offering unique promotions and discounts for these days. If you have any kind of retail presence in Mexico, and it's the Hot Sale, which is coming up very soon, or the Buen Fin taking place in the fall, consumers will be very surprised if you're not offering promotions for these holidays. So that's something to keep in mind. November is a very important month. As you see here, we've got two main shopping holidays, El Buen Fin, which is a purely Mexican holiday, and then Black Friday and Cyber Monday, taking place the same days as in the US. So consumers in Mexico are aware that Black Friday and Cyber Monday are holidays in the US and that they'll find good discounts and good promotions that day. They're so aware of this that even retailers in Mexico will offer their own Black Friday and their own Cyber Monday deals. So that's another case where you'll want to be thinking carefully and thinking about how to segment those promotions from a Buen Fin taking place earlier in the month. And obviously Christmas is a major driver of sales in the United States across a variety of product categories. One thing to be aware of in Mexico, like in many Latin American countries, is that workers receive a bonus or even sometimes an extra month's salary at this time of year. So it's a time when consumers may have put off their purchases to make it this time, even if their purchase is unrelated to gift giving. So that's another major opportunity to be thinking about and taking advantage of. Okay, let's go ahead and advance. So we've talked a bit about things to be aware of if you have brick and mortar stores or brick and mortar retail partners. We'll touch on some of the things to be aware of now if you are selling online, whether that's cross-border or whether you have direct.com.mx presence in Mexico. A few years ago, maybe even just 2 or 3 years, we really only talked about the challenges with e-commerce for Mexico. In general, there's still low levels of consumer confidence in online channels. Consumers expect a variety of payment methods. If you remember back a few slides ago where I mentioned that levels of credit card ownership is fairly low in Mexico, and even consumers who have credit cards are sometimes reluctant to use them because there's concern about risking their financial information. What we've seen in Mexico is a lot of innovation. There's now a lot of different ways that consumers can pay for their online purchase besides providing a credit card. This is very different than in the US, where if you have space to enter your credit or debit card as a retailer, you're set. That's the only kind of method of payment consumers are really interested in. Whereas in Mexico, there's some cash on delivery, but more commonly, consumers can print a copy of their receipt and take it to a third-party location, like a convenience store or a pharmacy, and the pharmacy or convenience store can process the payment in cash or even with a credit card in person if the consumer prefers that. So if you're opening your own online retail store in Mexico, you'll want to be keeping in mind that consumers are expecting a variety of payment methods and not just credit and debit cards like we see in the US. Another challenge is that we see increasing international interest in Mexico's e-commerce market. What this means is that, as we've been discussing at length in this webinar, Mexico presents a good commercial opportunity for lots of companies. We saw Amazon enter Mexico almost 3 years ago. Every year, it seems like there's new players both with direct presence in Mexico via the internet or that are making it increasingly easy to sell cross-border or to buy cross-border. We see the company Border Free, in particular, partnering with more retailers than ever to try to make it easier for consumers to navigate the shipping, navigate the pricing when it's not taking place in their own market. So the landscape is starting to get a bit more crowded, but still there's plenty of space for new players, especially ones that have something unique with regards to products or provide a really good e-commerce experience. And then finally, as touched on before, international geopolitical dynamics are a bit more risky for Mexico. There's the discussion of NAFTA, and it is indeed looking up for NAFTA surviving, but obviously the dynamics between politicians in the United States and Mexico remains a question mark for the next couple of years. If we were to look at other markets, Brazil, for example, in the region, it would be much more domestic politics determining the risk factors for e-commerce. On the opportunity side, which is important to touch on, hopefully I haven't talked you out of e-commerce in Mexico altogether. It's important to note, just like we saw on my first slide, that e-commerce in Mexico is gaining momentum. It's growing very quickly, and we continue to expect to see it grow at a healthy double-digit sales growth rate every year for the next 5 years. I mentioned that right now we see about 4% of retail sales in Mexico being done online. In 5 years, we expect that to be closer to 7 or 8%, so getting much closer to where the United States is today. We also see that in particular, the marketplace formats in Mexico have been very successful. There's the Amazon marketplace, there's eBay, and there's some local competitors to be aware of as well. So marketplaces are often the easiest way for new brands to enter a country. That's definitely a strategy that can be very effective in the case of Mexico. One of the benefits that we talk about for e-commerce in every market is that you can have way more product variety online than you could ever have in a brick and mortar store. And this is really significant in the case of Mexico. Mexico, in contrast to a lot of the other markets in Latin America, Brazil, Argentina for sure, has relatively open commercial policies. And so it's relatively easy compared to other geographies for suppliers from other countries to get their products in the market in brick and mortar stores. So this means that consumers in Mexico have access to a lot of product variety already, just in physical stores that they'll find in their day-to-day life. So oftentimes, the products that consumers look to buy online are going to be very, very specific or niche products. It's a very long tail scenario, even by e-commerce standards. And so if you sell a product that's maybe a little bit more niche or that maybe is never going to be something that every household has, e-commerce in Mexico can be a really good option because consumers are turning to this channel for products like that. And then finally, given the geographic proximity to the US, it's much easier to leverage US capabilities and resources to develop a strong online experience in Mexico compared to other parts of the world. Even if you're just entering through e-commerce, it's much easier to do so from the US to Mexico than from the US to China, for example. There's no time zone issues. The currency issue is obviously one that there's lots of access to and information on in the US market, and geographically, even shipping from the US to Mexico is much easier than in almost any other country pairing. Let's go ahead and advance. I mentioned that marketplaces can be a great strategy for brands that are looking to get more presence inside Mexico without committing to their own .com, .mx, or their own brick and mortar stores. Here are the 3 major marketplaces in Mexico that you'll want to be sure to be aware of. We have Amazon, Mercado Libre, and Linio. All three are very well known amongst consumers. Amazon and Mercado Libre especially. Amazon because it's been famous for quite some time in Mexico, even before Amazon had great presence in Mexico, and Mercado Libre, which has been around for more than 20 years, actually, so definitely one of the early arrivals in e-commerce. Linio is a bit newer to Mexico, just in the last 5 years or so, but it's been very successful, it's been growing very quickly, and it's also a relevant player to be keeping in mind. One of the advantages of Amazon is that even if you go to amazon.com.mx, they have pulled in sellers from the US website, and they make it very easy for consumers to be shopping with domestic sellers as well as international sellers. Amazon has a very strong reputation amongst consumers in Mexico, and even though confidence in online channels overall is a question mark for e-commerce, that's much less of a concern for shoppers shopping on Amazon because their brand reputation for being reliable and consumer-centric is so strong. Mercado Libre has the advantage of knowing the local market very, very well, having been present for so long. They are also growing at an impressive rate, especially considering that they are a much more mature company. The big thing that Mercado Libre is working to do now is introduce more official stores onto its website. So if you're a brand and you're not ready to commit to a .com.mx website, an official store on Mercado Libre can be a great way to go. The official store adds a lot of credibility to the purchase compared to some of the unbranded items that appear on the platform. Mercado Libre also has a lot of payment and shipping solutions, which, as mentioned, can be two of the more complicated parts for selling online in Mexico. So taking advantage of their solutions can be a good way to mitigate the complexity of some of those factors. And then finally, touching on Linio. Linio is, again, a little bit newer. It has a very smooth user experience. They sell a wide range of products. They've even been expanding into grocery and travel purchases more so in the last year. This is another platform that consumers check quite a lot and has been working to grow its official storefronts, especially in the homewares category. So some good opportunities to be found there as well. And obviously, there's many more retailers in Mexico than the ones that we've been able to touch on. Walmart is also a very relevant online player in Mexico, and they've recently launched a marketplace for the Mexican market as well. That could be another good one to be looking at. Wish is another marketplace that has been getting some traction, although much more on the apparel and accessory side of things. That could be worth looking into. And then if we think back to the slide where I listed some of the key brands that you'd want to be thinking about in each retail channel, almost all of those brands have their own e-commerce capabilities as well. So partnering with them can be a good way into the market as well. And let's advance. That concludes the section on the retail environment in Mexico, and it actually concludes today's webinar. We've all put our contact information here. Please feel free to reach out if you've got any more questions about the retail environment in Mexico or in other markets, or want to know more about e-commerce. I've also put Euromonitor's contact information here. We provide quite a lot of free information through our blog and through our Twitter account, so please feel free to check that out. And with that, I'll turn it over to Lori to wrap us up.
Thank you very much for joining the webinar today. We wanted to thank our presenters, Juan, John, and Amanda. Thank you so much to Tempus and to Euromonitor for approaching IHA to put this together. We hope that you've learned a lot. And obviously, as Amanda just said, the contact details are on there for your usage if you have follow-up questions that you haven't asked during the webinar. IHA will also be posting this resource that's been recorded on our website at housewares.org/education/webinars, and that's available for you. Thank you to everyone who joined us today.